Okay, let's dive right in. Welcome, everyone, to this deep dive.
Glad to be here.
We're digging into some source material you sent over specifically, an article by Angela Lazaro. She's a licensed realtor in Richmond, Virginia.
Right, RVA.
And she's giving her take on the Richmond real estate market today, focusing particularly on mortgage rates and, how they're hitting home.
That's the plan today, yeah. We're going through this piece to really pull out the key insights you need if you're thinking about buying or maybe selling in the Richmond area right now.
What does it actually feel like out there? How's financing changing things?
Exactly.
And the article gets straight to the point about something we all remember, those incredibly low mortgage rates from, just a couple of years back?
Oh, yeah. It calls those sub 3% rates during the pandemic a, quote, historic anomaly. Basically, fueled by some really unique economic circumstances. Things were definitely unusual then.
So the first big point the article really hammers home is this: thinking we'll get back to 3% anytime soon. Well, it says that's unrealistic.
That's a really crucial starting point, I think. The article's pretty direct. It says chasing that dream of 3% might mean you just end up waiting. And potentially miss out on good opportunities in the Richmond market that exist today.
It's a mindset shift, really. You can't base your plans on a market that was, let's face it, pretty extraordinary.
No, definitely not.
Which brings us to, okay, where are we now? The article notes current rates are generally hovering in the mid to high 6% range.
Right. And what's interesting is the historical perspective it gives. It asks you to compare today's rates to, like, the 80s when we saw double-digit rates.
Oof. Yeah, that puts it in perspective.
It does. So while today's rates are higher than, say, 2021, they are definitely not the highest we've ever seen. Not even close, historically speaking.
That comparison really lands. The article sort of frames today's rates as being closer to long-term historical averages.
Yeah, it calls it a normalization. Like, we've moved away from that extreme low back towards a range that historically is actually more typical.
Okay, so normalization. Closer to the average.
Yeah.
What does that actually mean for people trying to buy or sell in Richmond right now on the ground?
Well, the article is clear. Higher rates directly hit your monthly payments. And maybe more importantly, they impact a buyer's overall purchasing power.
Right.
This is where it gets real for buyers. The article gives a pretty stark example. Someone who qualified for, say, a $400,000 loan at 3% might only qualify for around $325,000 at 7%. Now, that doesn't factor in taxes and insurance perfectly, but it shows the kind of shift we're talking about. It's significant.
Wow. Yeah, that's a big difference in buying power. That forces some adjustments.
It really does. The article emphasizes the need for realistic budgeting.
Yeah.
For buyers, that often translates into maybe adjusting expectations on the neighborhood or, certain home features.
And it gives some specific RVA examples, right? Like maybe considering areas such as Manchester or Stratford Hills instead of, say, pricier parts of the near West End.
Exactly. Or maybe looking at townhomes as a, quote, great entry point if a detached house in your preferred area is suddenly out of reach with the new budget. It's about flexibility.
Adaptability, yeah.
Yeah.
Understanding what your dollar buys now. Okay, what about sellers?
So for sellers, the article's main point is you have to understand how payment-sensitive buyers are right now.
Because they're doing that monthly payment math with the higher rate, not just looking at the list price.
Precisely. And the article warns pretty clearly that overpriced listings in today's market sit longer. They just do.
So no more just throwing a high number out there and expecting multiple offers immediately.
Not necessarily. It really highlights the need for accurate data-driven pricing from the start.
Well,
your prices gotta make sense given what buyers can afford with current financing.
Even in those really popular Richmond spots the article mentions, like Libby Mill or Scott's Addition, homes there still move.
But yeah, the article stresses they need to be priced right for today's financing costs. Can't be stressed enough. And yeah, while areas like the Fen or Churchill are still competitive, the overall market pace, that crazy, almost manic frenzy from 2021-2022, that has cooled, according to the article.
So fewer instant bidding wars, maybe. Buyers might actually have more time to consider things.
That seems to be the case, yes. But the article is also quick to point out that, well-priced homes in good condition still attract attention. They don't just sit forever if they're priced correctly and show well.
Okay, so it definitely sounds like a more challenging environment in some ways, with higher rates and less buying power.
Yeah.
But the article also points out some silver linings in RVA.
It does. It finds a few positives emerging from this market shift. One is what it calls less frenzy, more opportunity, specifically for buyers.
Less frenzy. Meaning what exactly?
Well, with fewer intense bidding wars across the board, buyers might actually get a better shot at doing things like, proper home inspections.
Things that were getting waived left and right before.
Exactly. And maybe even negotiating on terms a bit. Things that felt almost impossible during that peak intensity.
That definitely sounds like a healthier way to buy a house. What else?
It also mentions building inventory. Slowly, but it's happening. It acknowledges that rate lock-in thing.
Right. People holding onto their super low rates.
Yep.
Makes sense.
Yeah, why give up a 3% rate for a 6% or 7% one if you absolutely don't have to? But the article says inventory is gradually improving.
Because life happens.
Pretty much. Job changes, family changes, retirement. Stuff happens that forces moves. So this slow increase means buyers are starting to see more choices compared to the really tight inventory we had during the frenzy.
Okay, more choices, less frenzy.
Yeah.
And then there's this angle about future refinancing. That's interesting for buyers thinking long term.
Yes, this is a really key point. The article isn't saying, hey, today's rates are amazing. It acknowledges they're tougher than 3%.
Right.
But it suggests that historically rates do tend to fluctuate. They might eventually moderate.
So the play isn't necessarily to wait indefinitely for rates to drop dramatically.
Yeah.
But maybe buy a home you can afford now in a good RVA location you like, and then you're positioned to potentially refinance later if rates do come down significantly.
That's exactly the idea. It's about aligning the purchase with your life circumstances, rather than trying to perfectly time the market for a specific rate that, frankly, might not show up for a while, if ever.
Which kind of leads us nicely into the core advice Angela Lazaro gives in the article.
Yeah, her takeaways.
Well, the first one feels pretty central. Focus on the present and your goals. Don't put your life on hold waiting for rates to crash back to that anomaly level.
Right. If buying makes sense for you now, you want stability, you want to build equity, you want to settle into a Richmond community like, say, Forest Hill or Bellevue.
And you find a home you love that fits the current budget.
Then the article suggests it's still a smart long-term move.
It's about your needs, your timeline, your finances today. Okay, next piece of advice sounds non-negotiable. Get pre-approved. Seriously.
Oh, absolutely fundamental. You just have to know exactly what you can afford with today's rates before you even start looking seriously. No guesswork.
And for sellers, the message is just as direct. Price, realistically.
Yep. Work with your realtor. Really analyze the local comps in your specific Richmond neighborhood and make sure that price reflects how higher financing costs are impacting buyers' budgets.
The price has to work for their total cost, not just look good on paper.
Exactly. The article also pushes exploring all options for financing.
Like looking beyond just conventional loans. FHA, VA, which is key, near military bases. Maybe USDA loans if you're looking just outside the city.
Yes, precisely. And also looking into things like rate buydowns.
Where someone pays up front to lower the rate for a few years.
Right. You or the seller might contribute to that. Or just being open to adjusting your target location slightly to make the numbers work. Flexibility again.
And the final big piece of advice, which feels really important. Keep a long-term perspective.
Yeah, the article really frames real estate, especially in a solid market like Richmond, as a solid long-term investment.
Focus on the 5-10-year picture, not just the interest rate on day one.
That's the idea. Are you buying for the next couple of years, or is this a place you see yourself settling into for a decade? That changes how you weigh the current rate versus the long-term benefits.
That really does reframe the whole decision, doesn't it?
It absolutely does. And, that brings it all back to you, the listener, trying to figure out the RVA market.
So the big message from this article seems to be, yes, mortgage rates matter a lot, but there's still just one piece of the puzzle.
That unique 3% party is over. Today's market is, well, it's a return to something more traditional.
And being successful in this Richmond market, whether you're looking in Midlothian, upgrading in Glen Allen, or downsizing in the city, it comes down to really knowing your numbers.
Setting those realistic expectations.
Pricing strategically, if you're selling.
And getting good, knowledgeable local advice, like from the article's author.
Yeah, it's really less about wishing for 2021 conditions and more about making smart moves in the market we actually have now. This deep dives into Angela Lazaro's perspective, I think it gives a really useful, grounded view. The 3% dream, history, today's rates. More normal, historically. Success now. It's about strategy, realism, and your long-term goals, not just waiting by the phone for rates to plummet.
It definitely requires a different mindset, a different approach than maybe what worked just a few years ago during that really intense period.
Absolutely. So maybe here's a final thought for you to chew on as you consider your own situation in RVA. Given this shift, this return to a more traditional market,
Yeah.
what specific opportunities or perhaps challenges does this current environment create for your individual real estate goals compared to that super fast, high-pressure market we just came out of? Something to think about.